Hooty hoo, all my stock market gamblers. Welcome today. It's Monday. Stock market's back open. I'm Tall Mike. I'm so glad you're here today. Well, what we got is a stock market that's struggling for direction. Now, today we're having an update. Dow's up about 150 points. Nasdaq's up about 80. But over the last 3 days, it's kind of just been a sideways pattern. Now, I'm betting that the markets will pull back and retest the recent lows. Right now, we're bouncing up against the 50-day, and I think that that's going to be resistance. I don't think we're going to get through it. Now, why do I think we're going down? Well, I mentioned on Friday the HYG. I look at this. This is junk bonds. Now, the junk bonds are continuing to go down, which means the interest rates are starting to creep up on the junk bonds. Okay. Now, interest rates on the 10-year yield starting to creep up. We're at 1.61. I think we're going to get downward pressure on the stock market again. What did I do today? I put some puts on the SPY. I put the puts on. Okay, that's a small position for me. I'm not 100% convinced that we won't get right through that 50-day moving average again. I am a gambler, and I'm betting that it's going to go back down and retest the low. So I have some SPY puts that I put on right before recording this. All right, what I want to talk today about is real estate. Now, full disclosure, I am a real estate broker. It's my day job. Now, I want to talk about what prices are doing. Prices are starting to come down. We're starting to see what us brokers call, they're price improvements. They're not price reductions. They're price improvements. In other words, the prices are starting to come down on listed properties. The property's listed, it doesn't sell. They improve the price. They're starting to drop a little bit. Now, what I think's going to happen, here's what I think. I think that we're going to get a supply shock of inventory coming onto the market soon. Okay, right now inventory's it's very low. We have in the whole nation about 1.3 million units for sale. 1.3 million units is very low. Okay, so what happens if there is a supply shock that comes on the market, and where's the supply going to be coming from? Well, let's talk about this. What's just recently ended? Let's call it the eviction moratorium, right? That's pretty much come to an end. What about the mortgage forbearance? That one's come to an end. Now, the mortgage forbearance is the one I really want to talk about first. All right, so we got the mortgages that people aren't paying. They didn't have to pay. They could go on what's called forbearance. Now, forbearance, people use the program. At the peak of the program, there were 7 million homes in the mortgage forbearance program. Now, as people got the unemployment money and they found new jobs and the job market started to open up, people started to drop off the forbearance. And we're down to just around 2 million, a little bit less than 2 million people on the forbearance program right now. But the forbearance program has come to an end. Banks can again foreclose upon people that are not paying their mortgages. So we got 2 million people, roughly, we're going to use round numbers, 2 million people not paying their mortgage right now. Now, what percentage of those are going to be new homes coming onto the marketplace? Well, let's think about this. So when you're in a mortgage forbearance, you really have three options. So the forbearance comes to an end. Option number one, you can start paying your mortgage again, and the bank is good with that. Option number two, you don't pay your mortgage and the bank's going to foreclose on you. But there's not going to be a lot of foreclosures. Now, why not? Well, because prices are high. Prices went up during this mortgage forbearance. So people still have equity in their home. So what's the third option? The third option is they're going to put their home on the market and cash out and take the money and run. And we're going to see a lot of that happening. Now, the experts say they're predicting about 20 to 25% of these 2 million homes will come onto the market for sale. Now, that would be basically 500,000 new properties coming onto the market. Now, I'm not I am an expert. I guess I'm a real estate broker. I'm supposed to be an expert. My guess is it's going to be about 50% of these properties that are going to come onto the market because they've been in forbearance for a long time. 18 months without paying a mortgage, it's hard to come back from that. Now, when forbearance does not forgive the money, they still have to pay that money, right? Now, granted, it's tacked on at the end of the loan, and it's like they'll have two mortgages to pay off, the original and then the forbearance mortgage. But what it does, it puts a big burden on them. So a lot of these people are going to be dumping their property onto the market. And the market's high right now. It's high, right? Almost record prices, maybe 1% or 2% below record prices. But this supply shock, I think we're going to get out of these 2 million homes, I think 50% of them are going to hit the market. That's a whole nother million. So 1.3 million in inventory right now is soon going to become 2.3 million units in inventory. Now, that's not even taking into account the eviction moratorium that came to an end. There's a lot of mom and pop landlords. They don't want to own their homes anymore. They want to put them on the market also. They want to sell. But I'm not counting those. But when you get a shock of going from 1.3 million to 2.3 million, what's that going to do to prices? Well, when the inventory goes up, prices go down. Now, what else causes prices to go down? Interest rates. We talked about how they're creeping up. 1.61 on the 10-year. Now the mortgages have gone over 3% again. For the 30-year loan, we're up over 3% again on mortgages. We haven't been over 3% since back in June, but now we're up above 3%. Now what if we go up and hit 4%, 5%? What's that going to do to home prices? Well, it's going to bring them down. The reason it brings them down is because it takes buyers out of the marketplace. The buyers can no longer afford those $1 million homes. Now at 3%, maybe they can afford $1 million home, but at 4 or 5%, they can only afford maybe an $800,000 or $700,000 home. So the buyers go away and the prices start to come down. So we're going to get a double whammy. I think we're going to get an inventory shock, a supply shock that's coming on, going to hit the inventory, another 1 million homes, basically made up from the eviction moratorium and, from also the mortgage forbearance. But what also happens? The mentality changes. Right now, people don't want to sell their home. They don't want to sell their home because of COVID, right? They didn't want people coming into their house and walking around and looking and touching things. They didn't want to sell right now. But a lot of these people are thinking about selling. And now when they see prices starting to come down, you see, when prices are going up, nobody wants to sell because 6 months from now, their home's going to be worth $50,000 to $100,000 more. So their mentality is, hold on. Prices are only going up. I'm getting rich. Well, when things start to go the other way, it's the fear of missing out, a fear of getting out. The fear of missing out for the buyers becomes the fear of getting out for the seller. The seller worries that he can't get out at that $1 million that Billy Bob down the street just got. He doesn't want to sell below the price Billy Bob sold for. No, he wants the whole $1 million, right? Okay, so he's got the fear of getting out. And all of a sudden, he's running to throw his house onto the market. So not only the 1 million homes that are coming onto the market for inventory from the eviction moratorium, from the mortgage forbearance, but then you got the mentality changing, and they're going to be dumping homes on the market. I'm telling you that there's going to be a shock in the inventory as it increases. And there's going to be a shock as interest rates start to go up. It's a double whammy. Now, granted, the Federal Reserve, they can come in and print more money and buy mortgage-backed securities and try to keep these interest rates down, but we'll see what happens. I think interest rates are going up. I do. I think they're going to go up because inflation is just getting out of hand, and people are starting to complain about it. People are starting to realize, hey, something's wrong here. And who's to blame? Well, the Federal Reserve is going to get the blame for printing all that money. So maybe they aren't going to print the money to back the mortgages. Maybe they'll even stop printing. Right now they do $40 billion a month in mortgages that they buy. Now what if they stop buying those? Well, interest rates will really be going up then. So we're going to get this change. This change is happening in real estate. It takes time. You got to be patient. But the market is changing. It's changing from what it was just a month ago. Things have peaked out. They're starting to come down. This inventory shockwave's coming, a tsunami of homes, if you will, is coming onto the marketplace. The mentality is changing. People are going to have a fear of getting out. Interest rates are rising. Be patient if you're a buyer here. Be patient. Things are only going to get better, I'm telling you. If you don't have to buy, I would hold off and wait still. I'd be in a wait and hold position. And if you got to sell, you want to get out now as quickly as possible before this tsunami of inventory comes onto the marketplace. Now, stock market, let's go back to that real quick. I'm looking at that to have a pullback. Now, on my SPY, I got puts. I'm out only a couple weeks. I expect this to be turning by the end of this week. If not, I will take these off. But I do think we're going to go back and retest that low. Now, if you like this stuff, give me the thumbs up and hit that subscribe button so we can talk later in the week to see how I'm doing. I may have it completely wrong. A lot of people think home values are going to continue to go up because we're going to print money into oblivion because of the inflation that's just going to keep running up forever. I don't think it can continue forever. A lot of people think stock market's going to hit new record highs. It only goes up, a lot of people think. Well, I think differently, but I'm an older guy. Sometimes it does actually come down. We'll see if I'm right. Hit that subscribe button so we can talk again later in the week. Get out there. Have a great Monday. I'm Tall Mike. Bye-bye now.